Okay, welcome everybody to another sixth panel. This one's dedicated to the topic of how to interpret drill results. My name is Matthew, host of Junior Resource Investing. Just a couple of kind of laundry list items here. Just a reminder, this is being recorded. Also, there's going to be a live Q&A at the end, so please fire your questions off into the chat on the right-hand side. And if it fits into the conversation as we go, I'll fit those in myself. But there will be the live Q&A at the end. I'll just provide a little bit of context here to get the ball rolling. I guess the way I would start this is that if you're listening to this panel, I really don't need to explain to you just how high impact drill results can be in this sector, right? Fairly or unfairly, companies and investors live and die by the drill bit. I wish then it was that simple, that good assays make the stock go up and bad assays make the stock go down, but it isn't, right? So despite how important they are, the cold hard truth is that not all assay news releases are created equal. So knowing what to look for, both good and bad, is a critical skill to develop if you want to keep your shirt in this game. So this is going to be a fun one today. It's not just going to be a typical panel. There's going to be more of an interactive component that we end with. We are going to, at the start here, just run through some good or bad assay disclosure practices. But then the second half is going to be more fun, and one that I'm looking forward to. We're actually going to bring up actual assay tables from news releases, and then we're going to quiz these three geos in front of us. We're going to put them to the test here, right? So we will discuss just live on scene here. What do they see that's good? What do they see that sticks out that's bad? And maybe that discussion and comparison of what they are seeing in each individual assay. And so big thanks to Kyle, my tech guy, because he's the one that's going to be getting put through the paces in the background. I'm just the face of this organization, unfortunately, for that. But anyway, I am excited then, right, that we're going to have three active exploration geos or who have experience as exploration geos on to get their take on what investors should be looking for in these news releases. So joining me today are Greg Smith, who is the VPX at Nucor Gold, Anders Carlson, who's the VPX at GFG Resources, and Jean-Paul Tsotsos, who in a previous lifetime was a geo, but now is the VP of Corp Dev and IR at Chesapeake Gold. So gentlemen, before we get into the thick of it, first of all, thanks for being here, but why don't I'll give you guys a chance, quick elevator pitch, tell us who you are, tell us about your project, tell us about your company. Greg, do you just want to lead us off?
Sure. I'm Greg Smith, as you mentioned, Vice President of Exploration for Nucor Gold. I'm an exploration geologist, doing this now a little over 35 years, right from grassroots. Obviously, like most geos, started collecting soil samples, but now over the decades worked right up through discovery, development, and active open pit and underground mines. Most of that within greenstone terrain, structurally controlled gold deposits in northern South America or West Africa, which is where I'm working now in Ghana with Nucor. We've got our Enchi Gold project there. It's currently hosts 744,000 ounces indicated, 972,000 ounces inferred. We completed a real robust PEA on it a couple of years ago. We're actually in the process of updating that, and that'll be done in the first half of next year. And we've been really busy. We drilled 95,000 meters over the last 3 years. That resulted in 26 news releases of drill results. So obviously, I'll use some of that experience in terms of discussing today's topic.
Awesome. Thank you, Greg. And Anders, what about you?
Thanks, Matt. My name's Anders Carlson. I'm VP Exploration for GFG Resources. I've been in the seat for a little over 5 months. So I came from a mid-tier, 12 years working in near mine, brownfield, and grassroots exploration, mainly in Canada, but with some experience in Argentina, Turkey, and Nevada. GFG have one of the largest land packages in the Timmins Belt, 3 properties at Gold Arm, North Timmins, Penn, and Dore in the Swayze Greenstone Belt, just west of Timmins. And we're a very well-backed junior gold explorer, backed by Alamos Gold and the Lundin family, and building our story. And, very happy to be here.
Thanks, Anderson. Jean-Paul, you want to tell us your story too?
Yeah, sure. I'm Jean-Paul Tsotsos. I'm the Vice President of Corporate Development and Investor Relations at Chesapeake Gold. I've been in the seat maybe about 6 months. Prior to that, I was at Hudbay Minerals working in the Corp Dev department there. In my previous life, I was a geologist. I worked at Royal Nickel Corporation, Beartooth Platinum, and I worked for a consulting firm called DeRouge Geological. Got a chance to look at a whole bunch of projects in that role. When I switched over to the finance side, I worked at BMO Capital Markets for about 4 years, covering a whole bunch of junior stocks and, having a chance to look at the drill results and understand, what these companies are doing and what they have. And then on to Chesapeake, where I am now. Chesapeake's really there's 3 stories in Chesapeake. The one that a lot of people hear about is Metates. It's, a 19 million ounce gold deposit with another 500 million ounces of silver in Mexico, in Durango. Right now, we're doing a lot of met work on it. And, as we work through the met results, and we're hoping to put out a PFS on the back of that. But really the story more recently is the work that we were doing over in Sinaloa, where we made a discovery of a new gold-bearing skarn system. We've done a bunch of channeling sampling along the skarn, and we've done a bunch of drilling under it. About 19 holes, on the bookends of either side of this skarn. One side we had 24 meters from surface of 6 grams, and on the other side almost 4 grams from surface, again 24 meters. So it's an exciting new story. Market's been reacting very well to the story. We're up already 22% on that. And we're a company that has money in the bank. We have about 24 million cash, and we have some great investors, including Sprott and Sun Valley. So we're poised for the next stage. We're looking to get back out there, do a little bit more ground truthing, some exploration on the ground mapping, and then hopefully get the drills back turning on Lucy. So that's where we're at.
Perfect. Yeah, thanks, guys. Just that nice little intro. So let's get into the thick of it here, right? We'll start just discussing, red, yellow, green flags. I always get a kick. It doesn't really matter how good or bad bonanza or bear and results are. Every company is always extremely pleased to provide the results. So if you're going off just that first sentence of the news release, you should be buying every company you read about. But obviously things are a bit more complicated than that. So I'm just I have a list that is by no means exhaustive. So I really want to encourage you guys. I'm not a geologist, right? So please extend, disagree, or clarify as needed, right? So, tell me what I've done wrong here if that's what it comes to. But let's just we're going to rip through just a few things that I've picked up and things that I look for myself. I'm just going to I'll just have one of you guys per topic, just so we can kind of keep things a bit more dynamic and smooth flowing. But just so, yeah, I'll just jump into the list, I suppose, right? So, first thing I look for, really obvious one for me in terms of a red flag is smearing, right? That the idea of you have a really high grade vein, but then you stretch those grams per ton over meters that maybe would be waste rock otherwise to maybe allow that assay to be a bit more juicy for people, right? So, do you want to, maybe, Greg, I'll just start with you. Do you just want to discuss that or what that means and provide some more information on that one?
Sure. At its basic level, it's just bad science. It's not reflective of and it gets back to the like a lot of things will. It gets back to the geological model that you're using to model this deposit. And although we like big flashy individual drill holes, deposits are built by multiple drill holes, and they have to fit into a model. You have to know what your constraints to the mineralization are, and if you're looking at something that's constrained in a meter wide vein, then that's what you should be reporting. You shouldn't be reporting pardon me, 50 meters of 5 grams if it's 1 meter of 500 and then a whole bunch of duds, and that usually tends to be pretty evident in the data. So if somebody gives you enough data that if they have the wider intercept and then the higher one, there are some mechanisms out there, even on the web, that you can put those values in and see that the other 48 meters is grading 200 ppb or something, and people just shouldn't be doing it. People are pretty aware of it, and when you try to get away with it, you just don't. So hopefully it'll be something that we don't see too much in the future.
I think you make a good point there, Greg, about those online resources. There's the assay calculators, equivalent ounce calculators that are out there. There's multiples out there. The democratization of knowledge that we have with the internet, right? So good. Anders, how about you? One thing that I also look for is that cherry picking of highlights, right? Where you've got like holes 1, 2, 3, and 5 that are present, and it makes you wonder what the heck happened to 4, right? So do you want to just discuss the idea of like not all holes are present or only partially presented? What is that an issue for you when you read a news release?
Yeah, definitely. It's hard for companies, particularly junior companies who might not have a lot of news, not to focus a lot of their efforts on 1 or 2 drill holes that really stand out. Use that to go market, you use that to raise money. But in the end, like you said, if you've drilled 30 holes, and the market knows that, you've telegraphed that to the market, and then you put out a release with 1 or 2 holes, and in that, you've got, even goes back to the grade smearing, you're cherry picking within a hole, within an intercept. It doesn't speak very well to the positivity of your project or how you're going about reporting. So when I look at a set of results, if I know it's a 5,000 meter program, I want to see the majority of those meters put out in a statement and in a table. I want to be able to go through it. Even better if you can get a table of header data, so all of the collars, you can see the dips, the azimuth, how they were drilled, the length of holes. You really want to see that. And regardless of whether you're seeing one intercept or hole that's carrying an entire release, you'll get a much better sense of the scale of the project and the prospectivity if you can see them all put each beside each other on the table. And I think that's why a lot of companies tend not to do it, because there's only 1 or 2 holes, and they know very well that they're cherry picking, and it's not reflective of the overall system.
I mean, I think ultimately that this whole conversation could just be boiled down to what you guys both kind of referenced it so far, is just providing exhaustive, authoritative data and not that cherry picking, right? Like damn lies and statistics, right? We can make things say whatever we want if we're willing to kind of massage the numbers, right? Jean-Paul, the one I got for you. So what about like visual cross sections, right? I mean, you have these like overhead where it shows you drill collars, shows you drill locations. Are there things that you look for, I mean, in terms of absence or presence of the visualizations themselves? Or what about like if they skip holes, that sort of thing? Like what do you look for in terms of the visuals that they actually provide to back up this data?
Yeah, it's always important when you see a whole bunch of results come out that there is some sort of graphic documentation that goes along with them. You can get a whole bunch of drill results like Anders had mentioned. You get the collars, you get information about how long the holes were, but when it comes down to it, understanding what it actually looks like in 3 dimensions is really key. And one of the places that I always, I used to joke when I used to work at the bank or my previous employer that, you get a company out there that did a whole bunch of drill holes. They've got, some good intercepts in something. And then they decide that, if the mineralization's like this and they have a whole bunch of drill holes down this way, well, it'd be a great idea to drill right down it and then have a long section of great holes. And the joke was we used to call that the Canadian holes, right? Because we would just drill right down the mineralization. And if you don't have sections and you don't have a long section or, plan map, it's hard to see that. And it's not just drilling down, the same, horizon, but, you get a deposit that, similar shape, maybe this, and they keep drilling from different directions, hitting the same target and reproducing the same results, right? So it's really important to understand not only what the results you're looking at, but what are they 3-dimensionally and what actually are they showing us as investors and who's looking at the press releases.
Excellent. And I think that you have to have a certain degree of investigative kind of blood in your veins to do this, because you can't just look at the one-off news release. You might have to go back and cross-compare what they've released in previous drill campaigns, right? And start to try to build that model yourself if they aren't providing that data. I guess there's a couple things that I wanted to talk, that you had a couple of great points there. But Gray, do you just want to discuss this concept of true width that JP was kind of referencing there?
Yeah, absolutely. It's again gets down to science, and it's when you're drilling these zones that they have an inclination, excuse me, a dip, and if you're drilling perpendicular to them, then that 2-meter interval in the drill hole is actually 2 meters of mineralization. But if you're at any sort of angle to the structure, then a 2-meter interval might actually only be, even a 20 centimeter vein or a 30 centimeter vein. So knowing the dip of the structure and the angle of the hole, you can make those calculations yourself. A lot of companies, of course, include that information in their news release. And if you have a deposit, if you have an advanced project, you should know what the dip of your structure is. So you should be able to provide that. Obviously, if you're just putting the first couple of holes into a zone, you might not know the exact dip. So you might, I certainly have seen very commonly, you say, it could be 60 to 90%. You don't really know. It's not a true width, but it's in that range somewhere. And it really gets down to the fact that width down the hole is not necessarily the width of your structure. And if you're drilling a hole that's at relatively close to the same dip of the structure, it can actually be quite excessive. You can have a 20 centimeter vein that gives you a 2 or a 3 meter wide intercept, and when it comes to actually mining it, you just can't mine a 20 centimeter vein. So you can barely mine a 2 meter vein. So you really need to know that information.
No, excellent. Just a question here, a really quick, easy one here, maybe, and Anders will just kind of keep the cycle going here. Kevin Bourgeois asking us a kind of a nice, simple one here. Just can you clarify, just for people in the audience, the difference between greenfield and brownfield, Anders?
Sure, and everybody on this panel is going to have a different opinion. When I worked in the mid tiers, around deposits, essentially, brownfield would be defined as, being able to be truckable or, have an impact on your existing infrastructure, mine or processing plant. So if it falls into a radius or, whether it's distance or access or another type of variable where that target can have an impact on production at your current site, we would have, concluded that was brownfield. If it falls out of that area and it needs to be standalone, a target is no longer going to be able to have a positive or any impact on an existing site or mine or mill, we would say that's greenfield, and that needs to be a standalone target. So all of a sudden, your greenfield standalone targets need to be larger, much more robust, and they need to be able to make it on their own, as opposed to a brownfield target that, in reality can be pretty marginal. But if it can displace, other tons or, ounces that you've got in the ground within your mine complex, a lot of the times they are developed.
Awesome. Okay, thank you. So I just so John Paul, this is one for you. So this is going to be more of an open-ended question. I'm already going off script here a bit, but I love a good miner deck, the visuals that you see, like the top assays for gold in Canada the last 2 weeks or whatever. I think this is going to be more of an open-ended question, but you look through these, you see these drill results that just pop off the chart, like, oh my God, right? 80 meters of 5 grams per ton or something. And you go look at the stock and the share price has barely even ticked, or maybe it's even gone down or something, right? But there's just been this tepid sort of response. What are some reasons, more kind of suspicious kind of reasons? Why do you think, what are some things that people should look for if they see these great results, but there's no actual impact on the share price? What are some reasons maybe that are kind of hiding under the cover or hiding under the hood for why that is?
Yeah, so there's a lot of definitely factors that contribute to a share price not moving, right? Maybe that day was a bad day for the metal price, right? And so everything's down. It doesn't matter who you are. You might be down 2%, but then everybody else in the industry is down 10%. So technically you're still actually up 8%. So just, first of all, look at that, what's actually the market really telling you. The next thing, looking at the holes, going back, if I have a company and I have a deposit and I have, it's well defined at the top part, and I have let's say a PFS done and I've got 30-year mine life on it, And then now I'm drilling and I'm hitting stuff down here, and I'm hitting great grades and great thicknesses down here. But we all know that 30 years of mining up here, right? We're not going to be getting to the stuff that's down here for, 30 plus years, unless we decide there's a plan with an expansion or some way to bring production forward. So sometimes, great drilling results, but it's going to be a long time before those results actually turn into any sort of, profitable number. And so, one thing is that. Another thing is, companies will put out results, and it depends on who the team is, where it is located, and then what's the balance sheet look like for the company too. If do they have enough money to continue to follow up on those results? Or are they going to be going to the market the next day, on the back of that, to do an equity raise in order to continue to follow up on those results? If you're in a country that, one day it's great, then the next day, it's a bit more challenging, that it makes it more difficult for the share price to react because there's an overhang on where you are. And then finally, when it comes to management, when I was working in consulting, there's a couple of things that we had to tick off. Who's the management team? Has the team actually been to site? It's usually a pretty good question. And has the CEO actually been to site, seen the the rocks, seen the terrain, met the people, know the conditions, know what he's actually talking about? And there are a lot of people that are, whether they've jumped from the IT boom back in 2000 and pre-2000, and they jump right into mining to catch the next wave and have no clue anything about mining, and they've never been to site or anything. Those are red flags that usually pop up when you're looking at those kinds of things.
Yeah, the one that you off the start that you said there that kind of stuck out to me is a good example of not fitting the mine plan. Is you get large, low grade bulk tonnage situations where adding another 20 million tons at half a gram doesn't move the needle economically. So adding 10 years to a 20-year mine life doesn't do much if you could actually find that high versus finding more high grade stuff to front load, right? Anything else, guys, on that one, Anders or Greg? The reasons why? Reasons why maybe you don't see that response in the share price.
I'll jump in and say, well, maybe a few weeks previously or a few months previously, they announced 10 meters of 200 grams, right? And maybe the market, we've kind of touched on this, expectation was that they would have similar results. So again, and that's tough to fight against, right? This could be a good result, but maybe it's just not as good as what they previously announced or what the market expected. And at that point, at least, I think there's at least some hope that you can recover and you can explain how it fits into the context of your model and how it is adding to the growth of your resource, et cetera, et cetera. Again, you hope that message comes out right away with the news release, but if it doesn't, it's not a complete lost cause. You can then, work at it and do some webinars or provide some additional content on your social media pages and try to get the people's attention back. But it could just be that simple, is that it's good, but didn't meet people's expectations.
What I like about this is, and maybe Anders, hopefully I'm not stepping on your toes. Do you want to crack at that one, Anders, or are you feeling good about what these guys said?
Yeah, no, I would just echo something that JP said about, the people. I think when you look at people's history, their track record, the people, the companies that are going to report a certain way, and it doesn't matter where they are or, what projects they're on. They're either always going to be conservative or stretch it or be in the middle. And so I don't think people are overly complex. And I think when you put the same people in different projects, they tend to try to spin things the same way, regardless of results. So I'd look at the team more than anything at first glance.
I like that conversation because you guys, it was a bit of a leading question and none of what I was going to say came up. So I like that you guys had different answers than me. The ones that I was maybe going for was there's a world of difference between a twin hole or an infill and a 100-meter step out, right? And that's, yeah. So, I appreciate you guys have different answers than that too. I guess we're back to Jean-Paul here. This is one that sometimes this is one that I look for, and it's maybe not as critical, but hiding behind equivalent ounces sometimes is a bit of a red flag for me because if you're a polymetallic explorer, you can kind of glue together 6 or 7 of these pretty weak grades to make things look better than they are. Do you agree with that one, or what do you think about that?
Yeah, I think that's kind of a charged kind of question because sometimes it's really difficult for an investor to look at something and I say, this hit here that I've got is, let's say 0.5% copper, right? And 0.5% copper at surface, and let's say you have a whole bunch of holes that are hitting that, and that's it's running up to, and then you have some zones where you got higher grade. And it could put together, maybe it all comes together and makes a mine. But if there's also gold in there, that system, right, and then you don't account for that, and then when you add the gold grade in and you do the copper equivalent calculation, then you can get it up to something even higher. So maybe it was 0.5 across the whole thing if you just look at copper, but when you add gold in, then you start to realize that this is 0.78% copper equivalent. Now, the real question you have to ask is, what are the assumptions that they're using to calculate the copper equivalent, right? What are the grades what are the actual precious metal assumptions and base metal assumptions that they're using? Because that's where the question mark starts to come in. And it's not just the grades that are important. Going back to, what's the geometry, where it's located, both, is it near surface or is it at depth? What's the topography around look like too, right? So it's not just, you can have wonderful grades, but then everything else is working against you. But I think providing a gold equivalent or providing a copper equivalent provides an investor a one way to at least compare with other projects pretty quickly and give you a general idea. But don't just take it, straight off the bat. You should really dig deep and have a, closer look at what that actually means, and don't just go right off the top. But it's a good place to at least start for comparing it to different assets.
Mm-hmm. Yeah, trust but
maybe
verify.
I'll add a few things there.
Nope,
Matthew.
go for it. Yeah, go for it.
Yeah, again, I think a lot of cases it gets back to the geology, right? If you're talking about a porphyry copper deposit that has significant gold credits, then there's dozens, if not hundreds, of mines in the world right now that are producing gold and copper economically under that situation. But if you're looking at what is a primarily gold deposit and it has negligible but a little bit of copper, then that actually gets to be a detriment, because that can get in the way of you recovering your gold. You can end up spending more money getting that copper out of the rock than it's worth, and again, it can even lower your recoveries for the gold. So it really gets down to the geology. Again, for porphyry coppers, copper golds, copper gold moly, obviously that's a tried and true system. Same epithermal gold silver deposits, adding the gold to the silver, they tend to both come out with the same processing facility. So that's valid. But yeah, when you start adding 5, 6, 7, 8 metals all together, and that they're going to have different processing facilities to get that metal out, and it's going to cost you, again, more money to get that 0.001 whatever, then it's adding to the value, then that's stretching the science.
Mm-hmm, mm-hmm. Yeah, excellent. So I'll just keep moving here just so we make sure we have enough time for our main feature event here. But another one here that maybe sticks out to me is inclusion or exclusion, right, of deleterious elements or penalty elements, right? So that's different minerals in different settings can be helpful or harmful, right, in terms of smelting. And so I guess, Anders, do you want to kind of just go off that, like some examples like arsenic or something, right, or how people can or should or don't report those?
Sure. You can look at a lot of different, polymetallics, gold systems where, those are, reported, and, you definitely want to look at the type of system. So, if you want to call them, VMS systems, that would have these deleterious elements, it's very important to understand what those are, because at the end of the day, your ore has a value, but the penalties that you get for concentrates that you're going to ship overseas, you're shipping these things a very far away to a very remote mill somewhere on some port on the other side of the world, and these things are going to come back, and you'll be charged for these things, and it will eat into your profits. So I'd say in a general press release, it's usually pretty difficult unless you're really familiar with the asset and project to really understand that for a first-time investor or something like that. It's something where, even, I'm sure in JP's, side on the corp dev side, when you're reviewing projects and assets and opportunities, things like that, those are where you really need to get into the details and understand what you're getting credit for and what is going to be a penalty, because it can flip the economics of a great looking project on its head very quickly.
Yeah, excellent. I think it's funny, Anders, every conversation I have all the time, it always just comes to, you mentioned this yourself in your previous answer, it just comes down to trust, right? That unless you're prepared to go, spend 10 years and become a PGO yourself and call BS and UCBS, for the retail investor, you just have to find people and teams that you can trust, right? And so I guess that's the whole point of this is being able to assess how people are presenting the information that they have, right? So I mean that's kind of the quick and dirty version of lists that I have. Are there, and so I guess we're up to JP here again, red, yellow, or green flags in terms of things that I missed or things that you think that is worth people talking about? And this one, I'll have all three of you can have a chance to chat here, but we'll start with JP.
Yeah, so the first thing I'd say is in every press release, there's usually a section that talks about the QA/QC. That's actually something you should read. You should stop, have a look at that, see what they're actually doing. Are they doing duplicates? Are they doing, they're putting standards and blanks in there? Are they testing the QA/QC to ensure that the work that's being done? It goes back to, the big scandal that happened, almost a decade plus ago with Bre-X, right? And, that section actually really is key. But it also tells you about what methods they used to test to figure out what the grades are. An example is, you can do a 4-acid digestion, you could do an agar-richa digestion on the material, and those actually tell you different things about the rock. In the base metal space, if you have a nickel project, the acid actually dissolves everything. It dissolves the sulfide-bearing nickel, but it also will attack and actually get the nickel that's in the silicates. So it's actually bumping up the numbers, and it's a fake number because that you can't actually physically recover economically the nickel that's in the silicates. Whereas the other method, you're actually just capturing the nickel that's in the sulfides, which would be the same thing that you would capture if you went through the metallurgical process. And so understanding the QA/QC part is really key to understanding what they're doing, and also management's view and understanding of what the project is that they're looking at.
Excellent answer. Greg, what about you?
Yeah, I'd say you got to look at everything. So, as difficult as it is right out of the chute, if somebody's got 100 meters of a gram and a half, that's, as Anders has said, if that's just down the road from an existing mill and a mine, then that's obviously spectacular and you can make money at it. But if you got to build hundreds of kilometers of road to get there, or if that particular intercept is 500 meters below surface and you got to mine it underground, if the metallurgy is not right, if you can't get permitting or have issues with other stakeholders, as difficult as it is right out of the gate, when you look at these news releases, that you have to go well beyond the grade and the width and at least in some level think about, okay, where is this going to go? What's their next step? Are they going to do more drilling, and are those results going to be better? As has been mentioned, do they have the money to do more drilling? If they find more of it, are they a takeout target, or is this something that this team, getting back to the team, have they built mines before? You really need to know what the road ahead is, and that includes a heck of a lot more than just grades and widths.
Mm-hmm. That's a good example from my own personal experience, Greg, of that is I know a company that it's copper porphyry, just banger assays, but then it just doesn't get any love. And you look into it, and their pit design, their pit model, about a third of it is currently like National Forest Reserve, and so you just gotta think, well, good luck, right? But
That's not going to happen,
right? Yeah, exactly. And Anders, what about you?
I think we've touched on it, but specifically internal dilution and minimum cutoff grades for reporting. You definitely want to see those in the footnotes. And it goes back to the grade smearing and how you're reporting, particularly when you're in a near mine or brownfield environment. The norm is to really ensure that all of those footnotes and criteria are used to tabulate drilling results. And if those aren't there, particularly in a more advanced setting or deposit project, it's a big red flag. And you can be, assured that there's probably some smearing and stretching of, what the true results are when you don't see those.
No, excellent, guys. Any last call for warning signs from news releases?
Yeah, one last thing I'd just put out there, our industry is like you have a treasure map and you're looking to get to the X, and there's going to be gold at the end of it, right? And so a lot of our viewers here and a lot of people, they watch TV shows where there's hidden gold somewhere on an island that was left there 100,000 years ago, and you got to go back and you got to find where the pirates left it. And you'll see that they use a whole bunch of different science techniques and a whole bunch of different accounts of what happened back then. And it's really kind of a mystery story, and you got to kind of put all the little pieces together. Well, it's the same thing in our industry, right? The gold or the base metals, they were put in the ground by nature at some point, right? And you have to use all the techniques that we have available to us in order to find out where those deposits are located. So if you see a company that's doing exploration and they haven't done geophysics, they haven't done geochemistry, they haven't done, mapping, right? But they just got a whole bunch of drill results, then, there's some flags that are starting to be raised, right? It's a holistic approach. You have to be doing all of those things in order to get a better idea and a picture of where you're working and what's the geology and what's the opportunity in the ground. Because when you get one result, right, if there's some structural component, you need to know where the structure goes, right? Is it displacing what I found here down, right? Or is it along the trend? You need to get a bigger picture. And if you have companies that are actively putting more money into exploration to kind of get an idea of the fuller picture, then you're going to have more success.
Yeah, I think that's a point well made, right? That exhaustive and iterative and reiterative process that is exploration that begins with years of above ground work before you ever poke a hole in the ground, right? No, well said. So just a couple of grab bag questions here, and yeah, folks, keep them coming in the Q&A. I've got some stash for the end there, so don't worry if I haven't gotten to yours yet. But just a couple of kind of one-offs here. Like a good one here. This is, I can tell Romeo wrote this one, but what about timing, right? He says, in politics, it said that everyone saves bad news for a Friday, right? Nothing like a 4:30 p.m. Friday news release to really kind of get you shaking in your boots if it's one of your companies that you're invested in. Is that fair? Is that a fair thing? Have you ever seen good news released after market close on a Friday? Greg, what about you? I'll let you handle that one for now.
I'd say rarely. I would agree that it's a red flag. It's not necessarily, it's not an ideal time, obviously, but there could be an actual reason for that. Certainly if you've got material information and if for whatever reason you believe that the public is going to have access to that on the Saturday, say for example, then yeah, maybe you want to get ahead of that and put the news release out on a Friday. So I don't know, one time out of 10,000, maybe there's a reason to do it, but and maybe that might be a valid reason. But in general, you want to get it out Tuesday to Thursday. You want to get it out pre-market. You want to be able to follow that up with webinars and interviews with the CEO, and you want to have all of those cross sections and plan maps and links already up on your website. In an ideal world, all of that is done ahead of time and is ready the moment the news release goes out, which is, for those of us on the West Coast, living off of Toronto time, basically, and you want to make sure it's there for, all those analysts and brokers to see it first thing in the morning. So that's definitely the norm, but that would be my answer, is that there could be a valid reason, but highly unlikely why you'd want to put it out Friday after the close.
Mm-hmm. I guess just I want to preserve time for the assays here, so I might just skip a couple of questions here. But maybe one that I think is interesting, and maybe I'll frame this as a question, and I'll ask Anders and Greg or JP if you want to jump in. But how much control do you have over how drill results are presented in news releases as the geo? And then think back to are there moments in your career where you can look back on and say, maybe you were uncomfortable with how results were being promoted or displayed?
I think you definitely have control. Certainly as a VP of exploration, you work with a small executive team and you put that together with the VP IR and Corp Dev. In terms of, being comfortable, I think a lot of my career has been spent with similar team, regardless of where we've been. So I think going back, 10 years and looking with our group when we ran the CB Gold operation under Claude Resources that was taken out in 2016 by SSR Mining, I think the frustrating thing is that even when you're putting out 200, 300, 400 gram meter products in a near mine and brownfield environment that is high grade, 10 plus grams per ton for a million plus ounces, it can be very frustrating when you aren't getting the traction in the market that you think the project deserves. And that goes back to macroeconomics of the market, right? We put out those results starting in 2011 while we were on the start of 4 or 5 year decline, and it wasn't until we actually got those deposits developed and into production and actually doubled the original resource grade, through the mill at 10 plus grams at Santoy Gap, that we were really rewarded by the market, by them saying, okay, it's going through the mill, you're making money, we can see the free cash, now you'll be rewarded. But, if you've got a good project, it can be very difficult to get the traction you're looking for. So no, I wouldn't say I was ever worried about, how we were reporting or anything like that. But certainly there can be a lot of frustration when that you're generating value and the market doesn't see it like that, sometimes for a long time.
And that right there is the opportunity that exists for investors, right? Is being able to interpret and read things that maybe the market hasn't quite caught on to yet, right? So I'm gonna skip ahead here, guys. Sorry, Greg or JP, if you had some amazing answers or just all queued up, ready to go. Let's get to the read those results, right? The game. So Kyle, our good tech guy, is going to bring up a series of assay tables with company names blocked out, and maybe let's just give them a read on the fly. What do you see, good or bad, right? So John Paul, we'll let's go in a circle here. We'll go John Paul, Greg, and Anders. Okay, so just quick one-offs. What do you see here?
Okay, so the first thing when I'm looking at this, look at the top. Right? Like it says the drill hole number, we have the type of drilling that's going on. So they're doing infill drilling, and that's what's happening here. Then you have the elevation. So this is obviously, it looks to me as it's brownfields exploration here because they're drilling at different levels. So it's probably a mine or an operation that, was a mine at one point. And then when I'm looking here, they have true thickness and they also have the width of the mineralization, just keying off here that the width in most cases should not be less than what the true width is. And just looking at the numbers here, that seems to be the case. It seems like they got a good idea of what the true thickness is here. And then the grades, one of the things that we used to do as we take all the samples that were not the including ones. So you see in the vertical depth they have including. We used to take this up when I was working at the bank, and we would take all of those and we'd add all the true widths and the grades together and figure out an average to get an idea of what the gold grade average was over these results, and then compare it to what was the resource of it to see, are they drilling higher than the original resource? Are they drilling lower? Kind of give you an idea of where the grades are going. If this is going down, is the grades going down? Is it going deeper in this operation. So, those are the kind of things we're looking at. The other thing on the intercepts on the other side, they have a good idea of, what the lithology is there. And so you can see that they have a better understanding. I'm not sure which company this is, but they do have a resource estimation on there. So hopefully they have a better understanding of what it is. And then, the other thing I would look at, because it's, potential operation, what are the thicknesses here they're going to be mining at, right? So here's where the question mark comes into play, right? A lot of the thicknesses here in the true width, they're less than 2 meters. And most mining that happens is, and this is underground, has to be at least 2 meters. So there's going to be definitely dilution in these results once they actually get down to mining there. So, those are the kind of things that I would look at first and kind of do an overview. But the most important thing is getting a holistic view, right? If I knew the name of the company, I could tell you, what were they doing above 610 meter level, and you get a better idea of what these results really mean to that mine.
Mm-hmm. Yeah, fair. So, I mean, that good, thorough answer there, JP. Thank you. Greg, what do you think? Maybe it's a general question for you, not the quality of the results, but the quality of the display of the results. Does this get your stamp of approval?
Yeah. Again, as mentioned, there's there is the true width, which, as I mentioned, you really can only do once you actually have a deposit. This is brownfields. They're drilling right off existing levels. So even though you see the downhole lengths here are at 500 meters, that maybe at first glance you look at that and you say, wow, that's really deep. But obviously they're close to existing infrastructure. So that's helpful. You've got the headline hole, and certainly that is significantly better than the other intercepts, but you do have others that are in the 10 to 19 gram per ton range, which is definitely underground mineable grades. I would second the comment on the widths, is that for the most part here you're looking at widths that are going to have some dilution. If your grade is 130 grams, then you can have all the dilution in the world. Likewise, if it's 19, but if you're looking at some of these intercepts that are 3 or 4 or 8 grams even, if you get excess dilution, then you might be basically making ore into waste.
Excellent. Okay, good. So I think that probably covers it. Anders, I'll let you take first crack on the next one. We'll switch slides here. Okay, so here it is. Anders, take a second. Intersects near surface vein, 342 grams per ton of silver over 18 meters. Take a look, and what do you see there? What grabs your eyes, good or bad, there, Anders?
I think right off the bat, when you're reporting silver, which they are here, it's always helpful for me to, look at it in terms of gold equivalent. My brain works more in gold than silver. So because I'm a geo and not math inclined, I just divide by 100 here. But, 80 is probably a better metric to use, more accurate. So if I looked at this really quickly, I'd say, okay, 342, divided by 100. So you're about 3.5 grams gold. Probably around 4 grams gold over 18 meters. So that's what I would typically do. Some people will be very familiar with silver and they think in silver. So that's right off the bat what I would kind of look at. When I look at the table, I'm seeing from 2 meters, you're seeing true width, which is good to see. Assays reported are uncut. You can see in the footnote there, no significant values would be an NSV hole, which is good. They're showing some of that. I don't see anything on internal dilution or any, there's no obviously cutoff grade reported. But one of the things that is good in this type of system, this might be a epithermal or a VMS system. They're reporting the base metals separately and not as a silver equivalent in the table. Maybe somewhere else they're going to report this as silver equivalent, but at least you can see, apples to oranges, and ensuring that you're seeing silver, lead, zinc, and gold. and it's not, like Greg and JP alluded to earlier, it's not all kind of lumped into a silver equivalent, because that can really be hard to gauge what you're actually going to extract value from. So I'd say overall, it looks pretty good. You do have some pretty high grade outliers, but it doesn't look like looking at the gram meter product. So if you take your grade times your true width, it doesn't strike me that you're smearing a lot. Your included intervals are carrying, a little more than half the grade of your total intercepts, but that's okay. That's not one assay, supporting the entire zone, which is good. You never want to see that.
I think you bring up a good point that I think JP alluded to earlier, is that conversion, right? Yeah, 80 or 100 or what value, what dollar value, dollar per pound of copper, right? How are they converting these metals for equivalent ounces? I mean, the one thing I'll just take my turn. I think, again, credit to John Paul for saying this first, but I mean, that table 2, right? They're giving you exactly where that hole is and exactly what it's doing right in the ground. I think maybe that's not something that I'm going to go back and rebuild and model myself, but I just appreciate that transparency, right? That I could if I wanted to, or they probably have it myself if I ask the company, right? One more, Greg or John Paul, anything you wanted to touch on here before we move on?
Yeah. No, I'll just say, so back to the drill hole callers, right? If you are another company looking at this and you are interested to hear what's happening, you could take the UTMs there, you could plug them in your own model, and you can actually see where it is and where the drilling is and what the intercepts are, and you get a better picture. One of the interesting points here in the text when you're reading, they mention that it could be amenable to bulk underground mining methods. And so you need to really understand what that is and what they're looking at on that, because you need to have really capable people, right? Really competent people to do that kind of underground method of extraction. And, it can be challenging. It all depends on what the rock quality is that's down there too. Is the rock that surrounds the ore actually amenable to bulk mining techniques? You need to understand more what is happening in the general geology of the area too. But overall, I thought this is actually a pretty good release.
And I think expense too, right? I mean, underground 4, 6, 8 times as expensive as an open pit, right? Then obviously that's going to impact the grades you're looking for too. Greg, how about I'll give you first crack at the next one, unless you have something burning in your heart to talk about there, or are you good?
No, that's fine.
All right. Okay. So next one here, Greg, I'll let you lead off.
Okay, we're looking at some silver again. Again, the highlight is certainly positive, 64 meters. The 1,200 grams silver is economic underground or open pit. These results are 350, 60 meters down the hole. I guess, yeah. So they as well include some copper and gold, but they haven't added it in the highlight, which again, as we've talked about, is probably the way to go, especially when you're dealing with 0.1 copper, 0.1 copper, 0.1 copper. That basically means there's no copper. So I wouldn't have included that there, but maybe other holes in this zone have appreciable copper, so that's why they included that in there. 5,000 meter program. They've completed. There's additional drilling underway, as we've discussed. When you have good results, it's always good if the company has cash in the bank and rigs drilling. You're going to have to follow up good results, usually with better results, or at least results that are just as good. We can see there's not nearly as much information, at least on what's presented here, as there has been on some of the 2 news releases we looked at. So it would be good to see those collar coordinates. It'd be good to know, where some of that other drilling is. Looks like what's ghosted out there is a plan map, but there's no cross sections included here. So not nearly as much information as the other 2. A decent highlight. But yeah, hard to say too much about this one, because there's not nearly as much information as was provided in the other 2 news releases.
Yeah, and that provision, that providing of context is so critical, right? That these aren't just kind of like floating in space or in the ether on their own, right? No, I think that's a good point. We'll just keep. We'll go next year, Kyle. Let's hit the next one, and we'll let John Paul. Wow, look at these results, eh? What do you think, John Paul?
Well, these look like they were put together on a typewriter to start off. It's obviously that these results are a bit older. It's not very hard to recognize when you look at the caller names, where this is probably coming from. But right off the top, my mind, obviously, when you first look at it, looks like there's some good grades in there. They provide, enough information for those two holes to kind of get an idea, but, there's absolutely no context at all, right? It looks like someone put this out on Twitter and they just tweeted it, and you have to go back to link and find out more information. But this is more a reflection of how our industry used to do things, back in the day, and this is why things have changed so much. There's no maps, there's no background, information on the assays. Even when we put out announcements, we put out all the assay results that go along with the holes. So that's all out there. And there's no QA/QC statement here, right? Remember what I mentioned about QA/QC statements. So, and there's no QP, right? This has holes everywhere. And, Matt, you could probably share who this is. But, this is a reflection of why our industry has changed so much over the last, almost 2 decades.
But it's 396 meters of 12.5 grams per ton, man. Come on, what's wrong with this? So,
which is a reason to provide more information, not less. And
yes,
that again is another adage. If something doesn't make sense, then or is hard to believe, then again, providing more information is what's required, not less.
You don't like it when people salt your core on you? That's a problem for you?
Yeah, well, again, this was it changed our industry.
Do you want to do the big reveal here, Kyle? This is one, if people know any history whatsoever. Do we have a big reveal slide, or do I just say it out loud? It's Bre-X. It's if you don't know what Bre-X is, go look at Bre-X. It's a movie now. We're just talking about Matthew McConaughey, right? But that was the scandal that changed the whole industry. Thank you, 43101, right? So yeah, big one there. Kyle, I just want 30 seconds. I just have I want to give a shout out to Dolly Varden. I've always been impressed. There's lots of companies where I like the information they get, but I always find Dolly Varden's news releases are extremely thorough and detailed in their information. Kyle, can you bring that? Just I think we got a hyperlink of their most recent one. Maybe while he does that, I'll just ask a couple questions here just to be efficient with our time. But just some questions here from the audience. So Tom asks, what about language that is used to describe assays? Is there a tangible difference between saying, 5 grams per ton over 10 meters versus 5 grams per ton across 10 meters? Is that a difference, or is that just a play of language?
I'll jump in there. That's just
Sure.
language. Yeah, I mean, again, we've talked about the true width versus the length down the hole, and that's certainly a very important differentiation to make. But whether it's across something or over something, that's just the English word that the geologist or the person writing the news release chose to use.
Sure. Thank you. And then another kind of just for beginners in the audience, right? Another good question from Tom here, and JP, I'll let you kind of take this one away. But what the discussion around, again, like used, right? Which I can appreciate is sometimes can be intimidating when you're learning new content. But we talk about width, but drilling is always vertical. When we're talking about true width, what are we actually describing? Another question from Tom there.
Yeah. So true width and language are obviously very important. If they only have a few holes, it's really hard to tell, what is the geometry, right? Like I was saying before, is it a planar body that looks like this, and it's basically a solid surface, right? And again, when you're drilling it, our goal as geologists has always been try to drill everything perpendicular to it, so you can actually figure out what the true thickness of that horizon is. And at the early stages, it's really difficult to know where the actual geometry of the deposit is, or the mineralization. But language, I'll get back to that, is really important. So you have to be very careful. The 4301 and CIM standards doesn't allow you to say certain things until you've added in a whole bunch of criteria, like what are the economics in that. You can't, off a drill hole, I can't say something has ore, for example, right? You need all of the additional details, the costs. You have to understand before you can call something ore. So wording is very important, and wording can get you a slap on the wrist, or even worse if you're not careful when you write press releases. And wording is very important. I know in our press releases, I'm sure Greg and Anders does it too, if you're making a big statement, there has to be some sort of reference of why it is, right? And so there's a reference of some external article that is put out that, this is the largest precious metals deposit in North and South America, right? So you can go to it. There's a whole bunch of sources that are out there, whether that's WoodMac or S&P Global, that has all the deposits all in one system, and they can actually make those kind of statements because they can review all of them and make that. So Metates is actually falls under that category as one of the largest undeveloped precious metal deposits, and we can say that because others have confirmed that, and we quote. So making sure when people are making grandiose statements, that there's something you can put your finger on and say, look, this is not just us saying this, it's other people, third parties that have done the due diligence, and they can say that, and we're just referencing it.
No, excellent. A couple of questions left. We've got 2 minutes left, so I'll try to make sure we're done on or near the hour here, just to respect your guys' timetables here today. But just there's questions around inferred versus indicated versus measured. Benjamin has one where he's asking, just all else equal, and this may be kind of can vary company by company or project by project, but how do you value inferred in terms of dollar value? Is there a rule of thumb for inferred versus indicated versus measured, right? And we'll leave aside proven and probable for now, but yeah, just inferred versus indicated versus measured. I mean, is there a relatively accepted industry standard in terms of like the dollar per ton? Well, let's talk about gold here only, right? But what do you, Anders, is there something you can kind of help us with there?
Yeah, I would say not really. No. I think in terms of relative value, you certainly get, rewarded for having a measured resource versus, indicated or inferred. I think historically, if you look at some of the biggest flops in the gold industry, a lot of them would have had, a lot of inferred on the books. And when you go to, drill that off and advance that and convert it to indicated or measured, things fall apart. And that's where large resources can fall apart very quickly, is if they don't have continuity, either on grade or on structure, and you're drilling it off at, say, 70 to 100 meter spacing, which might get you an inferred resource in some districts. That's one of the biggest red flags that you can see on a resource statement. So certainly, coming from a mid-tier size, you don't get value for really anything unless it's into reserve. So that's the backbone of valuations across the globe for any companies, particularly producers, is that reserve. So yes, you do get value for ounces, but not all ounces are created equal, and you certainly can de-risk your projects significantly by getting at least into an indicated category 70-80% of your resource.
Mm.
Yeah, I'd agree with that, where there's a line in the sand there where in many cases you get no value for inferred resources, especially if you're looking to, if your criteria for success is being bought out, and if you're looking for a major to do that, they won't pay you for inferred resources, and there are other examples where it has happened, and I would also add that our industry is the gap is probably getting wider. The major companies in particular are more and more happy to allow the juniors to advance these projects farther and farther now and de-risk them before they really want to jump in and do a transaction.
Mm-hmm. Excellent. And one more here, guys. I don't mean to take more of your time than we're here, but I thought it was a good follow-up question again around that conversion behind indicated, inferred, measured. So it's from where we go. Freedom for Markets. He's asking, what's the relation and ratio of conversion of mineral resource and reserve? I guess maybe the question I think he's asking is like how, in terms of spacing or in terms of efforts. I know there's a lot of variables that it's not a clean one-off answer, but like Anders, you talked about spacing to get to inferred versus indicated versus measured. Is there some color that I guess Greg or JP, maybe I'll ask you guys, is there some color you can provide to this to give them an answer to this?
Yeah, I'd happy to take that. So two things. It depends on the deposit, first of all, right? When I worked in nickel, for example, and we're working in basically a mafic, ultramafic intrusion, our first holes, the grids were 100 meters by 100 meters. And then we went down to 50 meters by 50 meters and then down to 25 meters by 25 meters. And at that point, we had enough holes that when you look section to section, things didn't move. When we went from 50 to 25, things didn't move very much. They basically stayed when we infill drilled. And that's a good indication that you have a good understanding of where the deposit is. Now, if you work in, say, a gold system and it's a gold vein system, right, 25 meters might not be enough, right? 25 meters, the veins are going, the direction that they're moving. And so you might have to get down to 3 meters or 5 meters in order to get the continuation where you can say, I have gold here, I've drilled in between, and there's gold in between, right? And then you can actually, put a mine plan around it and build infrastructure underground to get an idea of what the mine will actually look like when you go underground. You're mining all the different areas, all the different stopes. So it really depends on the deposit first and foremost. But every time you move a grid smaller, you're obviously doubling the drilling. So there's a cost to that. But it's really important because if you don't do that, then you're going to get down there and if you haven't drilled it off properly and you're mining, you're just going to hit a point and be like, oh, well, the mineralization does not continue when I have it over here. And there's got to be a reason, whether there's a fault or maybe the system's folded and you just haven't seen that yet because you don't have the drilling necessary to see the subsurface structures.
Yeah, and in the extreme of the cases, sometimes you certainly on the measured side of things, you won't be able to define measured resources until you actually get underground and can go there and actually put your finger on the vein, if you will, and sample it every meter over underground developments and those sorts of things. In terms of converting resources to reserves, again, real broad. You'd like to see 60, 70, 80% get converted because there has to be a reasonable expectation of economic extraction for your resources. So they should be economic, but there's always going to be some that in the process of doing a pre-feasibility study or feasibility study fall off the table, if you will. But you'd like to see it in that sort of range, 60, 70, 80 would be on the high end. Awesome.
Okay, thank you guys. We'll wrap it up here. I can feel the big wooden hook entering from stage left to drag me off stage here, so we'll call it here. But I just final thoughts. Really do, if you're listening still, go check out, not to pump Dolly Varden, but just I know there's lots, but I'm always impressed. They are very thorough, and because for me the question is always around transparency and that providing of context for people to be able to make informed judgments based on what you're providing them, right? So, and again, I just think Dolly Varden, I've always been impressed. Very, very thorough details. Otherwise, guys, thank you, Greg and Anders and JP. Thank you very much for your time, guys, and everybody who's listening. Thanks for being here.